Good evening, everybody. My name is Glenn. I am your host tonight for the first half of our meeting tonight, Trading Foundations on the Market Watch Group, working sessions, beginner working sessions. We are focused on the beginner in this first hour or so, 45 minutes to an hour. And then Scott will come on at 8:45 and 8:45, no, 8:30. I'm sorry, 8:30. And start with a bit of an intermediate session. All right. Very good. All questions are awesome. Please put all your questions in. Don't be afraid. All questions are great. No such thing as a bad question. And we're a bit early. We'll wait and see a few more people come on in. Get all my charts up here, ready to go. Bring up the chat. All right. All right. Lots of stuff to talk about tonight. There's always a lot of stuff to talk about. There's always something happening in this market. We're in a dynamic market. All right. We are set. Let's take a look. While we're waiting, take a quick look here at the SPY, which is here somewhere. Ended down a little bit on the day, but was up, did break above yesterday's big move, and then pulled back a little bit. So I'm sorry, looking at the wrong day. But here's the big move yesterday, and still the same thing. Went higher, closed a little bit lower, and my mouse is doing its weird thing. So let me clean this off a little bit. All right. Lee, good to see you. Hope all is well. Little sound check. Hope you can hear me.
Yes, Glenn, I can.
All right, very good.
How you
What's
doing?
going? I'm doing good. How you doing?
Doing fine.
What's new? Anything?
Oh, it's tending to get warmer. I was outside about a half hour ago. It's not real cold. It's
Where
nice.
where do you live?
I live in Deltona, Florida. That's between Orlando and Daytona.
Hmm. Okay. Yeah. Yeah, it's I just took the dog out. It's 66 degrees here, so it's not really cold.
No, 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 no. It's okay. It's getting
Yeah.
better.
Yeah. We're a little south of you, but still, of course, cold's a relative thing. I've said that before. I mean,
Yeah.
I remember when I lived up north, uh, I'd have a t-shirt on right now, and now, it gets down to 60 degrees, and geez, it seems cold.
Well, you've probably been in Florida for a while, and you're a little older too, probably.
Hmm. Yeah, I'm getting acclimated. I mean, I've been in Florida now for going on 15 years.
Oh, yeah.
So, yeah.
Yeah, I've been here about close to 25. I'm originally from Texas,
Mm.
and I lived a few years in Kansas City, Missouri, and I was so glad to get out of that.
Yeah, well, why?
That ice and cold.
Yeah.
Oh, it's great.
Nah, nope. I'm sorry. I mean, the snow is nice, and I really like snow. I really do, as long as it's in a picture.
That's it. Picture postcard. That's it. Or a calendar. One of the
Hmm.
two.
Calendar, yep, absolutely. But Beyond that, no, I just look and look, some people love it and God
Yeah,
bless. To each
yeah,
their own.
yeah.
It's nice, just the fall is nice. Spring is nice. Some people dig that change of weather, and I get that. But for me, look, it can be 90 on Christmas and I'm good.
Oh yeah. Oh
Got
yeah.
no problem with that at all. Um, Steve, good to see you. David, good to see you.
Hey, Glenn.
Um, let's wait a few more minutes. I came a
Hey
little
Glenn,
early today. Yeah.
did you get that post? You put out a post about the CPI, I think it was,
Yeah.
and I sent you a post, I mean message back saying, please explain,
Yeah. I
how that
did.
works and how it affects the met.
I did, Lee. Let me bring that up.
Oh, you did? Oh, I hadn't had a chance to look at it.
Let's take a look. My mouse is all of a sudden doing its funky thing, but it should be okay. So right here. So yep, yep. I
Oh,
said,
okay.
hi, Lee. The CPI Consumer Price Index is a large part of overall inflation reading.
Hmm.
Rising prices to consumers can lead to higher inflation numbers, which are closely monitored by the Fed. The Fed will increase interest rates in an effort to reduce inflation to their target number, which is 2%, which can reduce economic and earnings strength. So when inflation ramps up, it's usually because, or in theory, it's because the economy is too strong.
Oh.
Too many people buying too much stuff ramps up the economy, that ramps up inflation. The Fed's job is to always have inflation at its inflation number, which is now and has been for a long time 2%. So last year, inflation ramped up to about 7%, and what it's probably been a little bit more than a year. And so once that happens, the Fed starts to increase interest rates. Now, if you're a businessman, you don't like increased interest rates. That increases interest rates on mortgages for home buyers and
Hmm.
for credit cards and for business loans. And so people maybe not buy as many houses. Same thing with cars, anything that there's financed. Um, People tend to shy away from that. So that slows the economy, which is what the Fed wants to do.
Hmm.
But then if the economy slows, businesses make less money, people spend less money, and so then earnings are smaller, and then that affects the stock market because the market works off of earnings. That's the main
Gotcha.
driver in the stock market, earnings
Okay.
per share. So when the interest rates slow down the economy, which slows down inflation, it also slows down business activity and earnings, and then it works its way into the market itself. That's why when the Fed decreases those interest rates after they increase them, which they did, then they start to decrease them when they see that inflation has come down, which it has. That's what makes the market very happy because they know that will help to spur on business activity.
Oh, okay.
Does
All
that
right.
make
Yeah.
sense?
Yeah. Makes sense. Makes sense. They
Now,
got they got
yeah.
to keep everything on a lid on things so it don't go sky high. And we
Mhm.
okay. Yeah, I understand.
Now, the Fed has a two-part goal. The first goal is to keep inflation at their target rate. The second goal is to do that while allowing as much economic activity as they possibly can. So they could come right in here and say, hey, listen, inflation is starting to tick up, so we're going to increase interest rates to 15%.
Mm.
Would that slow down inflation?
Oh, yeah. It'll
Heck
stop
yeah.
it.
Yeah.
Mhm.
But it would also put the country into a recession. So the Fed does not want to do that. Now, sometimes the Fed kind of overshoots. They raise interest rates up too much and or they leave them up for too long. And that is what often, not always, but often causes a recession.
Mm.
They never want to do that. They want what's called a soft landing, which means the interest rates come down and the economy basically still stays strong enough to stay out of a recession. The overall numbers on the economy, the gross national product, basically, which measures the entire activity of the country economically, that might come down a bit, come down a quarter point, half a point. Maybe it was 3.5, maybe it pulls back to 3 or 2.75. So you'll get a small reduction, but if they do it right, in theory, they should be able to keep the unemployment rate low, business activity strong, keep people employed while slowly bringing down the inflation rate. So that
Oh, okay.
is their ultimate goal. Inflation at their rate and still a strong economy, staying out of a recession.
Gotcha. They walking a fine line.
Yeah, it's not easy. Definitely not easy. Um, and that's why, I mean, we know we can jump right into this. Um, listen, I don't know, I remember I've been harping on the fact that the Fed is silly to come out and say, which is what's freaked the market out here in the last few weeks, that this year they may only have one interest rate cut. And I said, listen, the Fed doesn't know. I mean,
Hmm.
not that they're not smart, they're very smart individuals, but nobody can forecast the future, not even the Fed. The Fed has numbers coming in just about every week of every month, inflation numbers.
Hmm.
PP, this just this week. PPI, CPI, every week there are unemployment numbers, there are manufacturing numbers, all these things that come out on a regular basis. All of these things right here. No, wrong one. Come here. There you go. All this stuff. Today, core retail sales, right? Unemployment claims, Philly manufacturing index is a look at how strong parts of the economy are. Unemployment, a lot of people unemployed, that's not good. Fewer people unemployed, that's much better for the economy. That shows strength and it allows people to be working and to be buying stuff. We have a consumer-driven economy every week. This week, the PPI came out yesterday. PPI came out Tuesday. CPI came out Wednesday. Consumer Price Index, Producer Price Index. These are strong indications that the Fed uses to determine what's going to happen with inflation now and going forward. So they can't possibly know what they're going to do for the rest of the year since those numbers, that information basically is constantly changing. So when the market's all freaked out, oh, they're only going to cut once this year, that's silly. It's an overreaction because they can't possibly know. So what is one, then again, these guys love to talk, these FOMC guys, and one of them was talking today, um, Mr. Waller, speaking on CNBC, and he said, as long as the data comes in good on inflation or continues on that path, then I can certainly see rate cuts happening sooner than maybe the markets are pricing in. So already it's the middle of January. And already these guys are backpedaling. And listen, I'm glad they are
Yeah.
because that's going to be a good backdrop for the stock market and the economy.
Hmm.
But it didn't take long for these guys to already start changing their tune about what might and could possibly happen for the rest of this year.
Yeah.
So, again, my personal opinion is that with a new president coming in and we're still in a rate reduction environment, whether it's a quarter point, half a point, 2 points, whatever it is, since nobody knows, interest rates ain't going up. They're certainly coming down. The economy is still in good shape. We have a very pro-business, brand new president coming in just a few days, pro-business, pro-jobs, pro-business deregulation, pro-supply side economics. I don't know how to, I just can't imagine that the market wouldn't like it. And I know that people are talking about tariffs, blah, blah, blah.
That's just a business ploy. That's just a tactic.
Hmm.
Yeah.
Yeah. Yeah. I read an article a couple days ago where Mexico is already turning away people from our border.
Hmm.
Listen, Mexico and Canada, for instance, God bless them, they know Donald Trump ain't playing.
Really? Yep.
And this is going to make a big, big difference for a lot of people and a lot of things. Trump basically said, I know Mr. Joe wants to take credit for this, but um, Trump said, and this is on a slightly political side, but just to show you how important it is to have a strong leader in this country and how I believe it's going to affect in a positive way the market. He told Hamas, he said, listen, this was about, oh, I don't know, 10 days ago. He said, look, on my inaugural day, if those hostages haven't been released, I'm coming to get them. We're coming to get them. And he said, quote unquote, you ain't going to be able to stop me.
Mm.
These people know he's nice.
Yeah, they
Joe
know
was
he's
asleep. God bless him.
yeah,
Donald Trump wide awake.
yep.
And so um, I just believe that that type of person, pro-business president, will be very, very good for this stock market.
Yeah, I tend to agree with you on that.
Hmm. I could be wrong. Again, I can't predict. Nobody
Yeah,
can
nobody
predict.
predict the future, but if you just going uh it's like you picking somebody for a job. You pick somebody that has very little experience in that arena,
Hmm.
they ain't gonna do no good. You don't have no confidence. People, but if you got somebody who has a reputation, it's just like when some of these corporations get a new CEO, one that's been known to come in and shake up stuff and make money,
Hmm.
man, people, stock goes up and all that stuff like that. Then you get one in there, don't know what he's doing, and they know he don't know.
Sure. No, I agree. I agree 100%. And to that point, my gosh, the market has done quite well with Joe at the wheel.
Yeah,
Look, facts are facts. I don't mind saying that, and that's the truth. But if it did well with
it,
Joe, who was pretty much asleep, what happens now?
yeah,
We'll see.
yeah,
I have high hopes. Um, so this could be this the next 4 years, especially, but of course, who can go out that far? But this could be, sir, this could certainly be a good year to be very involved with the stock market.
well, I hope so.
We'll see. All right. So let's talk about the market, guys. Um, we have a choppy market. This is a mess. That's all there is to it. This is a choppy mess. We had a big down day, again, overreaction from economic news, and then boom, it pops up like crazy, and then it pulls back again. You got serious support here. One, two, three times. Runs up again, can't get high enough, comes down again, can't break through. It did temporarily, and then reversed.
Mhm.
And now we have a big up 700 point day. This is this is some crazy stuff, man. This is tough to trade.
Yeah,
Don't forget your everybody's trade plan, which you guys should have or should certainly be working on as a beginner. Every beginner should have a trade plan. A trade plan is like if you were going to go see an old friend of yours who you hadn't seen, let's say you bump into somebody on Facebook. And like, yeah, man, I haven't seen this guy in 20 years. You get his address 3 states away. You have no idea how to get there, and you don't have a GPS. You say, you know what? I'm just going to jump in my car and I'm just going to drive out that way. I'm going to drive west I know that state is west, and see if I can catch a couple of signs. Maybe I'll stop at a gas station, ask a few people, or maybe a guy walking down the side of the road. No, who does that? You got a GPS, tells you where to go. Same thing with a trade plan. That's what your trade plan does. It shows you the path that you should take every day as you trade. How many trades should you take? How much risk should you take? It's your trade plan. What does your routine, daily routine look like? You need that. You need to be able to follow a path. Anybody who's been in business before, you know that all businesses have a business plan. Every good business has a business plan. I've said this before. You can't go into a Ford dealership and buy a refrigerator. Why? Because that's not what their business plan calls for. They calls for selling Ford cars and trucks. You can't go to Home Depot and buy a dump truck. They just don't sell them because that's not in their business plan. When we trade as a business. What is the main goal and focus of any business? To increase the value for its shareholders. And you do that by making a profit. Well, when we trade, we are the shareholder. Our goal is to make a profit. Look, I love to look at charts. That's not why I trade. I trade to make money. So every good trader should have a trade plan, like every good business should have a business plan. Period. There's no exception. There's no reason not to have one. We got the link to Master Trade Plan in Circle. It's very in-depth. We'll go over parts of it every time we can. I'm a big routine guy. I'm a big risk profile guy. These are all part of your trade plan. I'm a big trade plan guy. All right. So that's my trade plan rant for the day. Again, and why did I say that? Because your trade plan should include how many trades, for instance, should you take, but it doesn't have to be a static number. Number of trades. Some people, I've seen 3, I've seen 27, let's say 6. That's your maximum number of trades that you're comfortable with, but that should be in this kind of a market. In this kind of a market, maybe you only take 2. This is a nice trending market. This is an ugly little rodent. So there should be a difference.
In its history, at least 24 people have.
Miguel, I'm going to mute you for a second. So this is important. And maybe if you have a downtrend, maybe max is only 4. Maybe you don't like, which you should, but everybody's different. It's okay if you don't. Maybe a certain trader doesn't like downtrending markets. So maybe you only have 4 trades. These are all valid numbers according to the, not just 2 days or 3 days, but a reasonable amount of time in any market. All right. Any questions? Thoughts, ideas, guys? Nah, Miguel, no problem. Yeah. Hello. Good to see you. Let me know if you have any trades on. Got any stocks you want to talk about? I got a few. We'll go over them in a few minutes. But anyway, we're going to continue to talk about trade plans. If you have any questions, again, I'm a big believer in a fairly smaller trade plan. I think a trade plan should be able to fit basically on one page, maybe one side or both sides of one page. I don't believe in pages and pages of trade plans. Trade plans are designed to change over time also. So maybe you go in, you start trading real money from the very beginning. You say, you know what? I only feel comfortable with 3 trades on. And that's perfectly okay. And then after a while, you get some more experience. You get a bigger sample size. You're constantly making a few minor adjustments in your strategies and your trade management. And then you say, you know what? 3 is not quite enough. Maybe I'm good with 5 now. Okay. So you would change your trade plan. There's nothing wrong with that. But you should go and review your trade plan once in a while. You don't have to do it every day. Once a month, go back and review it. See if there's any changes you want to make. There will be. And so having 16 pages, that would be too much. So, um, 1 page, 2 page most trade plan, write it out, make it yours. It will tremendously help you as a trader. I'm telling you right now. All right. So anyway, this is a mess. They all look about the same. Where are the cues? Of course, I can never find anything on here. My goodness, I really can't. There's the Dow. Oh, there's the cues. Same thing, mess, cues, same thing, mess. I mean, look, you're always going to have pullbacks, but I mean, this is a much nicer trend than there's basically no trend. You have a slight downtrend here. I mean, you've got a channel, but who wants to trade a channel? I want to trade this. All right. So, and then, you buy puts here, and then the market runs up for 4 days. Your puts get blasted. Then you say, okay, well, I'm going to buy a call, and boom, that's the end of that. Then you say, okay, well, bounce off support, so I'll buy, you buy a put here, and then 3 days later, boom, it bounces off support. Yeah, so you can see what happens. Then you got a big down day here, and like, oh, here we go, and then boom, the market jumps up 700 yesterday. It's like, come on, man, seriously? So you can still make money in this. You can make money in any market, but this is tougher than this. And this isn't even all that clean, to be quite honest with you. Now that's a clean trend. We talked about this one. There really wasn't a nice clean pattern here, but this thing broke out. Boom. Talked about this last time. Okay, so let's just take a quick look at the sectors. Let's go to FinViz and groups. They like to call them groups. So today, utilities, the funky utilities, probably on word that they may decrease interest rates. Utilities tend to have a lot of maintenance. They do tend to build things, fix things, and they do tend to borrow money. So lowering interest rates can help them. Real estate, of course, industrials. If interest rates do come down, the market is saying that most likely they'll start building things, spurring on the economy. Same with financials. All right. Defensive is in here, which is still a little bit funky, but 4 out of 5 are very offensive. I always feel weird when I say that word, like it's offending someone. Offensive versus defensive sectors. All right. Same thing here. Energy, basic materials, utilities, industrial, finances, financial. These are all strong sectors. I'm even throwing utilities in there now. For years, utilities was not a strong sector, but I'm putting it because it's been strong for quite some time. So I'm putting in at least neutral, if not, scrolling towards strong. Could be from AI, could be from a lot of things, but it is what it is. All right. So always good to take a look at the sectors. That's kind of a finger on the pulse of the market. It will tell you where big money's going, and big money's going to go into offensive sectors. If big money thinks the coast is clear, and it will retreat to defensive, healthcare, and of course used to be utilities, but still at least those two because they are defensive sectors. Okay. I know you guys have heard that a million times, but still it's always good to review it. It's important. And you should look at it once a day. Takes 2 minutes. News. Let's take a look at the news. I already talked about that news. We did again. We had retail sales which were down a little bit. Again, is that good? Well, it's good for interest rates because it means the economy is a little slower. Is that good for the economy? No, because it means the economy is a little slower. Um, Retail sales here down quite a lot, really, from where it was forecast and where it was last month. Unemployment claims slightly higher. I mean, it's a tiny bit higher. I know I wouldn't worry about that. Philly manufacturing was really quite strong. So you got a lot of cross currents going on in this kind of stuff. And that's why um, the Fed has a tough gig. It does. But they chose it. And then they are high level economists. So that's their thing. They love these numbers. Hopefully they'll just always do a good job and never put us into a recession. All right. So what do we got in the market? We got stuff. Remember, we have earnings. Whoop. Very important, guys. We have earnings. Earnings are very important. Hold on a second. I got somebody beeping on my Skype. I hate when these people do this. I don't know these people. Earnings are coming up. We're in earnings season now. Let's bring up earnings whispers. If you take a trade now, I will tell you that you absolutely positively must check to see when the earnings date is. It's just all there is to it. You got to. Absolutely have to.
I'm saying makes sense. And of course, the other thing is when the patient.
So, I mean, are you essentially?
Sorry, Ray. Good to see you. I had to mute you a little bit. Good to see you though. Where was I? Where's I? Earnings. No, I don't want them there. Oh yeah, yes we do. Let's go to earnings whispers and let's see what's coming up. Tomorrow? Yeah. That's interesting. Come on. Tomorrow. Why is this not coming up? That's interesting. What is wrong with this stupid thing? Well, that's not going to work. Let's try it this way. Okay. Well, so much for earnings whispers. But anyway, a lot of earnings. God bless. I don't understand how this stuff doesn't work. Let's see. Let me try to find something else. Earnings calendar. Let's go here. Maybe that'll do something. January 17th. Okay, here we go. All right. So Schlumberger, it's been, I don't know any of these, but still plenty of different stocks. Just showing 1 of 10 of 15. So 15, at least 15 companies tomorrow coming out with earnings. And then you're going to see more and more as time goes on. Over the next couple of weeks, they're going to escalate over per day. You'll get a bunch. Remember, you got a lot of stocks over the next several weeks that have to announce their earnings. So keep an eye out. If you have a stock and you say, hey, man, I like this stock, whatever stock may be, and then earnings come out, say you took this little stock and say, hey, man, this is a great little stock, and you bought it here, and then you move your stop up under here and up under here, and you say, man, this is great. And then tomorrow it does this, and you're like, oh, look at me. And then it has an earnings announcement, and it drops down to here, and you're like, uh-oh, I just lost all my profit. You got to be careful with earnings announcements. You got to. Very, very important. Because sure, it could gap up and you could be even happier, and sure, it could gap down and you will not be happy. And just remember, let's say this was earnings and you wanted to stay in this trade. Well, you could do that. There's a way to do that. You could buy yourself a protective put. Maybe 2 weeks out, maybe $1 or so underneath the current price. And this way, if it gaps down, you're protected at the strike price of the put. You won't lose your profit. Or, to be honest with you, you could just sell it. Now, the nice thing about a protective put is if it does gap up, you're still in a trade. The other thing to do is sell it and don't buy a protective put. And a protective put is just a put that protects your profit. It's just a name. It's just the same put as you would. Then it's not like a separate category of puts. It's just a regular old put. Go out maybe 2 weeks. But this allows you to stay in the trade. And if it does gap up, well, then you'd be more than happy. All right. So 2 ways to stay in a trade, or 2 ways to manage a trade if you're getting into earnings. But if you do, don't stay unprotected. I'm telling you right now, because stocks do gap up and they also do gap down at earnings. And you might say, well, look at this stock. How could the earnings be bad? I'm telling you, that does not matter. It doesn't. Over the course of time, I'm telling you, it does not matter. Earnings surprises happen all the time. All right. Any questions about that? All right. Delta Airlines. Let's talk some more about earnings. Where'd it go? I thought I just saw it. All right. Delta Airlines. This is an interesting trade, potentially, not a recommendation. In fact, I always remind myself, I'm glad I do. Forgot to show this disclaimer. Baby, we should have like flashing lights. Educational and illustrative purposes only. No recommendations. All right. So this is interesting. This is called a post-earnings flag, especially with a gap. So you have a gap right there. A gap is where a stock closes here and then opens much higher. The gap, there are no prices in here. There are no trades. Let's say it closes at 50 and it opens at 55. There are no trades in between 50 and 55. It closes at 50, it opens at 55. That's the way it works. Now, why does a stock gap up? Well, because on earnings, big money likes what they heard and what they saw. That's the only reason it can go up. And so what you have here is you have a gap. So big money on a fundamental basis, they're tickle pink. And then technicians, they're happy because you have a pattern. And if, and only if, the pattern breaks out, then you have the technicians happy too, because that's a bull flag. So you have a stock that's on big money radar because they liked what they heard from an earnings point of view, and that's what drives most of big money. The big money guys don't look at charts, they look at earnings. And return on investment and margins and sales over sales and all those kinds of things. So they're happy, technicians are happy, that could make everybody happy. All right. So keep an eye on this. You can scan for these. You can go to FinViz. You can scan for earnings. Let's take a look. FinViz. So if you go to screener, and then you go right here to earnings date, you can scan for not that much, but still enough. Last 5 days or previous week. Let's try the last 5 days. All right. And then I'm going to put in above $15. And there you are. But you got 2 pages. Let's see how many. 33. So the 33 stocks, you might find something that you like. Remember, we're looking for a gap, and then we're looking for, that's almost one, a flag pattern after. Now we could also scan, see if we find anything here. You see, there's a gap. Goldman Sachs, there's your gap right there. It gapped up on earnings, but no flag. There's another gap. Oh, that's the same one. Not to see if I see anything here. All right. Morgan Stanley, the financials all pretty much gapped. But you can also, since we're not finding much, let's see if we can find one. Let's go to technical right here. And you can also scan for a gap. And of course, I'm going to giggle at the gap 0 because that's a gap means there's nothing there. You can't have, how you can have a gap 0? It doesn't make any sense to me. But anyway, I guess it makes sense to them. So let's see if we can find a gap. Now we're just coming up with the same ones. So not a whole lot right now. What's this one? No. Let's go back and see maybe. Oh, you know what? I know why I put Apple on here. Hold on a second. Let's bring up Apple. And then I brought this up because Apple had, and you know what? Can't see it here. Hold on a second, guys. Let's bring it up over here. Believe it was right here. Yep. So I saw this today. This was back last May, but here's your earnings. See, here's your E, obviously. There's your gap. Then it puts in a flag, breaks out a flag and zoom. Will that happen every single time? No, of course not. But that's what we're looking for. You've got a little gap, forms a flag, goes sideways, right? Remember, that's a flag when it goes sideways. Bull flag because price went up. Then when it breaks out the top of the flag, which it did, this bad boy just kept on going up. We would have got stopped out. We got stopped out. If we put our stop here, we're lucky. We put our stop here, we got stopped. We're going to get stopped out there anyway. And that's fine because we bought it down here and we sold it up here. That's about $30. That would be nice. So that's what we're looking for. A gap, and then a flag, and then a breakout. All right. All right. Time flies when you're having a good time. So we only have 5 minutes. Let's run through a couple stocks that I threw on here today. WMB is still doing well. Right? This was, there are multiple places to enter here. Nice little flag here. This was a pullback flag here. Right? Remember, runs up, pulls back, 3 days, breaks out, goes higher. This is a bull flag right here. Right? Stars and stripes. This is another bull flag, runs up, goes sideways, breaks out, goes higher. This is a strong trending stock too. It's an energy stock that's done much better than the energy complex for a long time. The stock's been going up since last February. You put the XLE, which is the energy index, and you can see since last February, this bad boy ain't been going up. Big difference. Now, it has here recently, it's going up nicely because the price of oil is going up. But we had a little pullback today in oil. Still going higher, though. So energy, something to keep an eye on, although it has run quite a lot. They had a little flag right here. 1, 2, 3. All right, broke out, went higher. Had a pullback flag right here. Well, this was a messy one, I must admit. But it was oversold. Broke out. Zoom. And this one was sitting on support too. There's your last support area right there. Price came down and then bounced off it. That supported the price of the stock, supported it from going lower. Think of it as a floor. And then it came right back down to that floor and bounced again. All right. Let me see if I can throw a few more in here before I go. No, that's a day trade. Oh, UGI was I talked about this Tuesday. This is a little utility stock. Had a pullback. This was an ugly pullback, but this was a nice little bull flag. 3 days. This was another bull flag and nice run up. Got resistance right here. We'll see what happens. This is a engulfing day because the green, which is today, is bigger than the previous day. The body is. So this is called an engulfing bar because this today engulfed the entire size of the previous day. It's a bullish sign. No guarantee, but it is a bullish sign. All right. What else do I have? ET, another energy stock. Again, broke out of resistance, right? All-time high. Had a little consolidation right here. Flag. Broke out, going higher. Here's your pullback. Oversold, and that did go higher. It's the same patterns over and over, guys. That's what technical trading is all about. Trading a chart, it's all about the study of repeating patterns. There's a pullback right here. And then boom. There's a pullback right here. Another boom. This is a bull flag, like I said. Same stuff over and over. Show me 100 charts, I'll show you stuff on all of them. PLTR. Little V bottom. This one's a little bit different. You could still draw it here. All right. It is oversold. It bounced right into its 20-period moving average there. You can see that little tail bounced right into the high of it, bounced right into it and pulled back. So we'll see. That's concerning. Something for a watch list. This is a rocking stock. There's no doubt about that. Oh, all right, guys. I am a minute over. All right. Scott will be on at 8:30. Take a break. Take a few minutes. And yep, thanks, guys. Thanks for being here. Remember, I leave my trade, what is it called? The chat trade, the trade chat. Trade chat? I think so. On Circle. I leave that on. Hold on a second. Oh, goodness gracious. Come on. All right, I leave right there, trading chat. I leave that on all day. I post stuff. If you have any questions of your own or on anything I post, by all means, put them in there and I will get back and answer you. All right. Stay well, be well. And I'm back on tomorrow morning at 9:15 a.m. Eastern. If you're interested, we'll talk more about the market and the open. Should be interesting. The market could be very interesting going into the weekend. All right, everyone. Stay well, be well. Take care. I'll see you soon.